Tata Group Chairman N. Chandrasekaran at Tata Motors annual general meeting yesterday announced that the company was targeting to achieve near zero debt in 3 years from now. Let's do a 3-point analysis to find out how will the company really achieve this. 1. What's the current financial situation of Tata Motors? Well, if you see, the company's net automotive debt stands at 48,000 crore rupees. That's a huge amount. Now, the June quarter was a washout quarter for the domestic business, which was already facing a huge stress because of the general economic slowdown as well as the subsequent liquidity crunch. Now, the problems actually got compounded during the reported quarter because of the pandemic, which actually halted all production that time. The JLR business also was severely affected by COVID-19 as well. Now, the company actually reported a consolidated net revenue of 31,983 crore rupees, which is down 49% from last quarter sales and down 48% from last year's same quarter sales of 61,467 crore rupees. It was yet another quarter when the company actually reported losses. In fact, the loss widened to 8,438 crore rupees in Q1. Tata Motors hasn't paid dividend to its shareholders for last 4 consecutive years. Now, though there are early signs of recovery for the passenger vehicle segment, the overall outlook for both the domestic as well as JLR business still remains quite cautious. 2. How will the company achieve its debt-free goal? Well, Group Chairman N. Chandrasekaran said that debt reduction will be among the 5 priorities for the flagship firm, which has actually seen significant erosion in shareholders' wealth over the last 5 years. Now, he also said that sharpening the brand portfolio, enhancing sales, enhancing service experience, and sustainable mobility will be some areas that will be the company's top priorities going on from here. Now, the company has already taken steps to reduce debt. Chandra also said that this includes making the company free cash flow positive by FY22. Now, the group will also look to unlock the investments in the non-core businesses as well. Now, overall, the investments of the group have already reduced by 50% during this fiscal year. And N. Chandra also said that they will continue to manage this tightly even going forward. 3. What should be investors' strategy on the stock then? Well, the stock price has definitely surged 9% today post the positive news flow. Equity analysts, however, believe the company really has a tall task ahead. We did speak to Rajesh Agarwal, who is the head of research at AUM Capital. He said that while the management is quite strong, looking at the current situation, the capital raising will not be easy for the company going forward. He also said that we'll need to look for a clear roadmap from the company as to how it is planning to cut this huge debt on the books. Now, once things really start moving on the ground, the stock could actually be definitely a multi-bagger in the long run, and that's what Rajesh believes. Investors' strategy, therefore, should be of wait and watch till we get better clarity on the progress of the management's plan.